everyone, and welcome back to the Deep Dive.
Today, we're going to be really digging into Ally Financial's latest earnings call.
Okay.
Which just came out on October 18th.
Right.
It's their Q3 2024 performance.
Yeah.
But I think more than just the numbers themselves, it's really interesting to look at what Ally's doing right now.
Yeah.
The challenges they're facing, the big strategic moves that they're making, and kind of get a sense of where they see themselves going.
It is. It's really interesting. You can see this kind of tension between these short-term pressures and then this really clear long-term vision that they're working towards.
All right. So I guess the best place to start is with CEO Michael Rhodes.
Sure.
He came right out and said earnings challenges are coming up.
Yeah.
But then he goes on to lay out this incredibly optimistic view of where Ally's headed.
Yeah.
So what's the deal? What's the story?
Well, I think what Rhodes is really emphasizing here is that Ally is making some choices now that are really going to set them up for success later.
Okay.
So it's less about, squeezing every last drop of profit out of this quarter and more about, okay, how do we build a stronger, more resilient business for the long haul?
So they're playing the long game.
Exactly. And
what does that actually look like when you get down to it?
Yeah. So one really clear example is in their auto loan business.
Okay.
So, they're being very selective about the loans that they're actually making, right? Prioritizing loan quality over just raw volume of loans.
So they're not just giving out loans to anyone who walks in the door.
Exactly.
Fair.
They're not just handing them out like candy. They're really being strategic. And it seems to be working.
Okay.
If you look at the loans they originated in 2023, 2024, they're actually showing much more positive trends than the loans from 2022 when lending standards were, maybe a little bit looser.
Yeah, that makes sense. It seems like everyone was kind of, loosening the belt a little bit back then, and now it's time to tighten up.
Exactly. Adapting to the environment, right?
Yeah.
And speaking of adapting, this is where things get really interesting with their electric vehicle strategy.
Okay.
They're really leaning into EV leases.
Okay.
They're reporting record numbers.
Wow. And, this whole EV tax credit situation has been all over the news.
It has.
Can you kind of break it down for us why Ally is so focused on EVs right now? And what's the deal with this tax credit accounting change?
Yeah, absolutely.
'Cause that's a whole other layer to it.
It is.
Yeah.
So I think at a high level, Ally sees the writing on the wall, right? The EV market is growing incredibly fast.
Yeah.
And they want to be a major player in that space.
Right.
Now, the accounting stuff can be a little bit complex.
Yeah.
But essentially, the way these tax credits work, Ally's looking at potentially switching to a method where instead of taking the entire benefit of that tax credit up front, they would spread it out over the life of the lease.
So it's less about the total amount of money that they're getting.
Exactly.
And more about when it shows up in their financials.
Yeah, you got it.
Gotcha.
It's all about kind of smoothing out their earnings.
Okay.
And I think that really highlights just how seriously they're taking this push into EVs.
Right.
It's not just, we're going to dip our toes in here. They're diving headfirst and they're adjusting, even really complex accounting stuff to make the most of this really quickly evolving market.
So it's a bold move.
It is.
For sure. But, let's switch gears for a second and talk about Ally Bank.
Okay.
They've got this massive deposit base.
Yeah.
Which seems like it'd be a really good thing right now.
It is.
Especially in these uncertain times.
Right.
And Rhodes, he actually boasts about it during the call.
He does.
Their deposit base and their dedication to customer service.
Absolutely. Yeah. And I think that's especially important given everything that's happening with interest rates right now.
Well, yeah, I was just going to say, because we've been hearing so much about these interest rate hikes and a potential economic slowdown, wouldn't you want a large deposit base if you're a bank in that situation?
Absolutely. And that's exactly what Ally's done, right? They've positioned themselves perfectly to benefit from these kinds of changing market conditions.
Okay.
So, as the Fed adjusts rates, Ally's going to be able to benefit from lower funding costs compared to some of their competitors.
So while everyone else is scrambling, Ally is sitting pretty.
That's a great way to put it.
Because they planned ahead.
Exactly. It goes back to that long-term thinking.
It does.
That long-term vision. Yeah. It's very smart.
Smart, but let's be real. It can't all be sunshine and rainbows.
Right.
What about these rising credit costs that we keep hearing about?
Yeah, so that's the elephant in the room, right?
Right.
No doubt about it. Both Rhodes and the CFO, Russ Hutchinson, they both acknowledged that credit costs are going up.
Right.
That's just the reality.
So what are they actually doing about it?
So they're doing a couple of things.
Okay.
First of all, and we already talked about this a little bit, they've implemented these stricter lending standards.
Okay.
They're being much more careful about who they're giving loans to.
Okay.
But they're also keeping a really close eye on delinquencies through something called vintage analysis.
Vintage analysis.
Yeah.
That sounds like something you'd hear about at a winery.
I know, right? Yeah. It's like, oh, this is a good vintage.
Yeah.
But it's a pretty simple idea.
Okay.
They're basically analyzing the performance of loans that were issued in different periods. Yes. So like, all the loans from 2022, how are those performing?
Okay.
Versus the loans from 2023.
Okay.
Right. It's like comparing vintages of wine. Some years are better than others, right?
Yeah.
Right. So they're looking at their loans over time to see if there are any red flags.
Exactly.
Yeah.
And what they're finding is, those 2022 loans not looking so hot.
Oh, no.
Yeah. But the good news is the loans from 2023, 2024, after they tightened up their criteria, those are looking much better.
Okay.
Much more positive trends.
That's good.
So they're being strategic about it.
Exactly. It's not just, oh, no, credit costs are going up. What are we going to do? They're actually taking steps to mitigate that risk.
Very cool.
But so they're staying on top of it, which is good.
Definitely.
But, it's not all just about battening down the hatches. Right. Where do they see opportunities for growth? Where are things looking up?
Well, one thing that Allie has always been really good at is innovation. Right. Especially in the digital space.
Right. They were one of the first to really go all in on that whole online banking thing.
Absolutely. They were way ahead of the curve on that one.
Yeah.
And the thing is, they haven't slowed down. They're still investing heavily in their tech.
Okay.
Always adding new features, making the platform more user-friendly. And it's not just about banking either.
Okay.
They're finding all these really creative ways to use their expertise.
Yeah.
In other areas like auto finance.
Oh, yeah, like that smart auction platform they have.
Exactly.
That's a great example.
It's like eBay, but for car dealerships.
It is.
Right.
Yeah.
So instead of having to go through all these like old school auctions, dealerships can buy and sell used cars online super efficiently.
So they're not just financing the cars.
Right.
They're becoming part of that whole ecosystem.
Exactly. They're integrating themselves into the entire car buying and selling experience.
Smart.
And that's what I think is really clever about their approach to innovation. It's not just about like one-off products or features. They're building a whole financial ecosystem.
Right.
Where everything works together.
Okay.
Seamlessly.
Yeah, I get it.
To provide real value for the customer.
That's a good way to put it.
Yeah.
Okay, but let's talk about the regulatory landscape for a second.
Okay.
Because we all know it's not getting any simpler.
It's not. It's getting more complex all the time.
How's Allie dealing with that whole side of things?
That's a really important question.
Yeah.
And it's clear that Allie's very aware of the scrutiny that's on banks right now.
Okay.
They've been extremely proactive in making sure they're following all the rules.
Okay.
And they've invested a lot in their risk management systems.
So it's more than just checking boxes.
Oh, absolutely.
Okay.
This isn't just about, going through the motions.
Right.
They've built a whole culture of compliance.
Gotcha.
Where risk management is part of everything they do. And that's huge for maintaining the trust of their investors.
Right, because investors want to know that they're being responsible.
Right.
Yeah.
They want to see a sustainable approach.
Okay.
And this ties back to what we were talking about earlier, right? With the long-term vision,
yeah.
Allie's not cutting corners. They're in it for the long haul.
They're playing the long game.
Exactly.
So we've got the tech investments, the focus on compliance, the customer service.
Yeah.
It seems like they're building on some pretty solid ground here.
They are.
But for those of us who like to look at the numbers, what are the key figures we should be paying attention to?
So we talked about the adjusted EPS of 95.
Right.
But another really important one is the net interest margin.
Okay.
Or NIM, as it's often called.
NIM, okay.
And Allie reported a 3.25% IM for Q3.
Okay. And just remind me again what the NIM tells us.
Yeah. So basically, the NIM is a measure of a bank's profitability.
Okay.
It tells you how much profit they're making from the difference between the interest they earn on loans and the interest they pay on deposits.
So the higher the minimum, the more money they're making.
Exactly. Exactly.
Got it.
And Ally is actually projecting that their NIM will expand to 4% over the medium term.
Okay.
Which is a really positive sign.
That's pretty impressive, especially considering, how uncertain things are right now.
Right, exactly.
Economically.
And it goes back to their strategy, right? Managing expenses carefully, growing that deposit base, making smart lending decisions. It's all connected.
It all ties together.
Exactly.
So it sounds like Ally's firing on all cylinders here.
I think that's a fair assessment.
Yeah.
They're not immune to challenges, obviously.
Right.
But they seem to be handling things pretty well.
You're rolling with the punches.
Exactly.
Okay. But we'd be remiss if we didn't ask about their capital position, right?
Of course. That's a critical piece of the puzzle.
How does that factor in?
So Ally has a CET1 ratio of 9.8%.
Okay, and for those of us who are not financial experts, what does that mean?
Basically, the CET1 ratio is a way to measure a bank's capital strength.
Okay.
It tells you how well they're able to absorb potential losses.
Okay.
And a 9.8% ratio, that suggests that Ally has a very healthy cushion to handle any economic shocks that might come their way.
So they've got a bit of a safety net there.
Exactly. It's a good sign.
Okay.
It means they're well capitalized and they're managing risk effectively.
Which is what you want to see in a bank.
Absolutely.
Okay.
Yeah, that's definitely good to hear.
Gives you a little more peace of mind.
Definitely, definitely.
So as we start to wrap up our Ally deep dive here, what are some of the big picture takeaways for our listeners? What do you really want them to remember from all this?
I think, if you take a step back and look at everything we've talked about, the overarching theme here is balance, right?
Okay.
Ally is walking this tightrope between these short-term challenges and this really clear long-term strategy.
Okay.
And they're not shying away from the tough stuff.
Yeah, they seem to be.
They're addressing it head on.
Yeah, and they're doing it with a plan.
Exactly.
Like, they're not just, flying by the seat of their pants here.
No, they've definitely got a plan.
Okay.
And it seems like a good one.
Yeah. Yeah.
I mean, we talked about the auto loans, the EVs, the customer service, the tech investments.
All those things point to a company that's thinking ahead.
Right. They're playing chess.
Exactly.
While everyone else is playing checkers.
That's a good way to put it.
So for anyone listening who's thinking, hey, maybe I should add Ally to my watch list.
Yeah.
What should they be watching for over the next few months?
I'd say keep a close eye on how that EV strategy plays out.
Okay.
Because, it's a bold move. It's not without risk. But if they can pull it off, it could be a real game changer. So the EV market is the one to watch.
I think so.
Okay. So to sum it all up, Ally's facing some challenges.
Yeah.
But they're handling them strategically. They're planning for the future.
Yeah.
And they're not afraid to shake things up a little bit.
Yeah, they're not afraid to be bold.
Which is good.
It's exciting.
It is exciting.
Well, there you have it, folks. Another deep dive in the books.
Yeah.
Hopefully you learned a thing or two about Ally Financial.
I know I did.
And their third quarter earnings.
Absolutely.
And really just how they see their business.
Definitely.
So, until next time, keep those thinking caps on.
Yeah, stay curious.
We'll see you back here soon.
Looking forward to it.
For another deep dive
into the world of business and finance.